Hi, Michael Gardner here, and welcome to this week's Property Insider video. Today, Dr. Andrew Wilson and I discuss the latest property market data. We talk a bit about what's happening to employment or unemployment, the rise in consumer confidence from a very low base, and also how home builder hasn't really worked as well as the government would like. If you'd like to keep up to date with all the latest information about our property markets, please subscribe to this YouTube channel and click the little bell icon so that YouTube keeps you up to date each time we bring out a new episode. A number of years ago, Dr. Andrew Wilson and I started recording these weekly Property Insider videos to give you insights into what's happening in our property markets around Australia. But boy, have things changed since we started recording these sessions. The updates of significant data that the Australian Bureau of Statistics put out or other agencies often released, they were usually out of date before they were reported. And this has caused many data providers to issue more frequent updates. Similarly, Dr. Andrew Wilson, who's highly regarded as Australia's leading housing economist, presents an up-to-date range of data in these sessions each week. So we give you some thoughts about what's happening to the economy, including our commentary on the property markets. Now, we bring you this perspective having gained this over, in both cases, over 40 years in the property markets as students of the economy, but we've avoided forecasting as there are just too many unknowns ahead. But fortunately now there seems to be some glimmer of hopes emerging. Victoria's virus cases look like they've peaked. Conversations starting to turn to gradually easing restrictions in Victoria, and the rest of Australia's economies starting to pick up. So to find out what's really happening in our markets and the economy, let's have a chat with Dr. Andrew Wilson, Chief Economist of myhousingmarket.com.au. Welcome, Andrew.
Thank you very much, Michael. Yes, and welcome to you.
Well, there seems to be a glimmer of hope. So let's start off with what's happening to our property markets, and then we can look further into the economy. What happened to auction clearance rates this weekend, Andrew?
Well, another reasonably steady result, Michael, at our auction clearance rate. Sydney remains, I guess, the leader of the pack. Another clearance rate around 70%. It's really tracked that way over the past 2 months. Melbourne was down, no surprise, but not down as sharply as we've seen in the previous lockout periods in April and May. Of course, listing numbers in Melbourne were half of what they were the previous weekend. So maybe not too bad, but of course, with restrictions on open air auctions and also severe restrictions on movement generally, we would expect a fewer auctions being conducted. But we have seen this switch to online auctions, the new marketing technique, which is transferring, I think, those traditional private sale, private treaty marketing activities into this sort of hybrid auction. That means there's not as much jeopardy involved. So we do see higher numbers of withdrawals. And of course, withdrawals, as they're counted as non-sales, do tend to push the clearance rate down. But we look at clearance rates without regard to withdrawals, we can see that notwithstanding, of course, we have more sales reported than passed in, and that's human nature, we can still see the trends and the relative position of auction clearance rates there, and still plenty of transactions happening. Higher numbers of Sydney compared to last year. Auction numbers is a product, as I said, of the surge in the new online auction marketing technique. But with the exception of predictably Melbourne, auction markets continue to track quite reasonably. It's really been that way for the last couple of months, Michael. So certainly building a base for what should be a reasonable spring selling season. If we look at some of the other data sets, Michael, as you mentioned, more real-time data, aggregated data sets, we look at new listing numbers. They've actually fallen over the last week, Michael, just starting to steady over the last few days. But of course, that was impacted by the Melbourne shutdown. We saw a severe drop in the number of new listings in Melbourne over the past week, also drops in other capital city markets. But as I said, the national number is now starting to stabilise over recent days. And when we compare the numbers now, new listing numbers, to the same time last year, we can see they're now quite similar. We've got to understand that a year ago, we were seeing a revival in our housing markets as that fear factor started to ease, sellers came back into the marketplace. So compared to a year ago, new listings are similar. We look at the relative position of listings, we can see now Sydney well ahead in terms of new listing numbers, particularly compared to Melbourne. That's not a surprise. New sales also, we've seen a sharp increase in new sales reported in Sydney. That's the newly reported sales. and declines, a marginal easing in Brisbane, but a sharp decline in Melbourne. And now the relative position for newly reported sales certainly has Sydney well ahead of the other capital city markets. Again, with those auction clearance rates reinforcing, I guess, the solid nature of the Sydney housing market at the moment. So the latest data is certainly continuing to show a steady revival in our housing markets, building a base towards what is likely to be now much better than expected spring selling season everywhere, of course, except for Melbourne.
Well, it'll be interesting to see when Melbourne comes out of lockdown and what we're allowed to do. But as you say, in general, it seems like life's moving on. And
Yes.
this week, ANZ Bank reported consumer confidence increased. It's had 7 straight weeks of decline, so it's not surprising. It's now started to pick up with the decline in COVID-19 new cases in Sydney and Melbourne. But let's be blunt, the levels are still very low and consumers are very cautious about their future. They're cautious about their financial future and their jobs, employment prospects. But there was some recent labour market figures come out, Andrew. What did you read into those?
Well, the latest ABS July labour market data, Michael, showed an increase in the unemployment rate. Unemployment seasonally adjusted increased from 7.4 to 7.5%. Not too bad, really, even though, of course, it's high. But I still think that we'll struggle to get that 10% unemployment rate by the end of the year, although there's growing pessimism from the Reserve Bank in terms of the outlook for unemployment. And of course, that does reflect the issues with Victoria. But so far, unemployment has been, although higher, certainly not reaching significantly higher month on month. And we can see that one of the reasons when we look into the data a little more closely is that we've got a return to work with a number of those with increased job numbers over the past 2 months. And also we're seeing an increase in the participation rate in terms of people returning to the workforce, obviously encouraged to look for work again. So still well below, of course, the shakeout that we saw in April and May, but the trend is certainly up and rising. You know, it's good news in terms of looking forward to the recovery. If we look at the breakdown of the state unemployment rates, Michael, we can see that unusually, I guess, or counterintuitively, we saw Victoria's unemployment rate fall. But of course, we're still not capturing the significance of the August shutdown in that data. Other states have seen increases in unemployment. But when we look at the state participation rate and jobs growth rate, we can see that clearly an increase in the participation rate in most state markets has obviously put upward pressure on that unemployment rate with the workforce growing, jobs growing as well. New South Wales is a standout there in jobs creation and increased participation in the workforce, similar to Queensland. Victoria, however, we mentioned its unemployment rates fell over July, but we can see there that the participation rate also fell, and as they're not included in the workforce, that means that helps to have a lower unemployment rate. So we need to watch carefully over the coming months where that Victorian unemployment rate goes. But there's no doubt that the increased job creation, increased participation in the workforce is a positive sign that we are definitely on the road to recover in our economy. But of course, there are some hard yards ahead.
Boy, are there. Having said that, another set of data that the Australian Bureau of Statistics brings out is payroll data, and they've shown that half the jobs lost during the COVID-19 pandemic have been recovered. Similarly, work hours have increased as well, but that's in general outside Victoria, not in Victoria. And Andrew, I guess this extra capacity means that there's going to be downward pressure on wages and inflation for some time yet.
Well, absolutely, Michael, and that's the least of our worries. It's getting people back into work and then sort of having our concerns about wages growth, which translates into inflation. But that's been an ongoing issue in our macroeconomy for a decade now. And that's something that obviously is exacerbated by the fallout from the coronavirus shutdown.
One of the things that interested me in the news this week, Andrew, is despite more first home buyers being in the market and getting more finance, the home builder scheme hasn't seemed to work as well as the government had hoped. Back in June, Scott Morrison unveiled a $680 million policy. It would hand out $25,000 grants to eligible Australians to build or to renovate their home. But as of the 7th of August, there was only 157 applications from South Australia. Tasmania received 90 applications and no other applications elsewhere. Total of 247 applications. Now, maybe it's a little bit early, but in some ways, I think the criteria are very restrictive, Andrew.
Well, if you remember, Michael, when the policy was first introduced, we were a little sceptical as to, I guess, as to the depth and the size and the potential for economic growth and building activity as a result. However, we did have a lot of anecdotal evidence from particularly project builders who said that they were being inundated with inquiries. It looks like those inquiries at this stage anyway haven't translated to actual sales and new contracts. And there are issues with new house and land packages, particularly in Sydney, where there is issues over affordability as well as the actual number of new home and land packages available. And most of those, of course, are on the fringe of the city metropolitan area, similarly in other capital city markets. So we did say that at the time that perhaps, and this is going forward now, the government should think about directing stimulus packages to the housing market in other sectors. First home buyers are always a fertile ground for generating demand. We've seen that in previous economic downturns. We've already seen with New South Wales increasing the threshold for stamp duty exemptions for first home buyers, and that's brought more first home buyers into the market, as with the Commonwealth's first home buyer deposit scheme, which has also been certainly roundly accepted by first home buyers. We need more. That would increase demand, I believe, even into packages directed at the established market, because there's certainly significant downstream economic benefits from increased sales in the established market as well. But look, no real surprise at this stage that the new build scheme hasn't had the same sort of result as was hoped for initially.
Look, I agree. Let's get the housing market going. This wasn't really a grant for first home buyers, like some of them thought. It was really a major stimulus aimed at construction. It created jobs for tradies and was going to kickstart the economy. And sure, the construction industry is important, but so is the housing industry. So let's see what the government comes up with. Well, as we started to say at the beginning, a few green shoots ahead. Look forward to catching up with you again next week and seeing what transpires.
Thanks very much, Michael.